Good morning, everybody. We have a sharply lower trade in the grain markets here early on Thursday morning. It is 6:31 a.m. Central Time as I speak here this morning. December corn futures down 4 3/4 at 363 3/4. November soybeans down 14 3/4 at 999 3/4. That's the first trade below $10 we've seen in a while. December Chicago wheat down 6.5 at 542.5. December Kansas City wheat down 5 3/4 at 478.5. December spring wheat down 3 cents at 530. We still have a very dry looking weather forecast in place for the U.S. Corn Belt really for the next 2 weeks. And I think that harvest pressure or the perception of harvest pressure is a negative factor here this week. Things should move forward very, very quickly. In the case of soybeans especially, and I discussed this earlier this week, there's no incentive to put the beans in the bin this year. There's no carry in the market. You've got some pretty high prices. I think that farmers have been fairly aggressive with pricing here, so a lot of beans will be sold or delivered out of the field rather than put into the bin, and that's a factor that perhaps could pressure the market short term here certainly, and maybe that's a little bit of what's going on. The other thing that we have is option expiration tomorrow. This is the October set of cereal options, and there's not necessarily a ton of open interest there relative to the November, but that's another thing to keep in mind. U.S. ethanol production continues to really kind of stagnate. Weekly output 906,000 barrels per day. That was down 2.2% on the week and down 4% versus the same week last year. So we are narrowing the gap a little bit between this year and last year. The 4-week rolling average is down about 7.3% versus last year. So we're improving a little bit. Gasoline demand for the week was down 9% versus the same week last year. So we're still not back to normal in terms of driving habits. Argentina's corn and soybean output is likely to decline this year. Dry weather and some government issues regarding capital controls are hurting farmer profits. So they're expecting the soybean crop at 46.5 million. That would be down from 49.6 last year. That's a decline of 6.2% if realized. Corn pretty similar. They're looking for 47 million, down from 50 last year. That's a decline of 6% if realized. Of course, we've got a lot of weather to go, but they do have some dry weather in place right now. China bought more U.S. soybeans yesterday. USDA confirmed a flash sale of 132,000 metric tons of beans to China, in addition to another 126,000 to an unknown destination. We've seen flash sales to China of soybeans every day this week so far. Export sales both to China and to all destinations are the best on record for this point in the marketing year. USDA will release its weekly export sales report this morning at 7:30 a.m. Central Time. We've got another strong week of corn and soybean sales expected. Corn sales expected anywhere from 1 million up to 1.8. Soybean sales expected 2 million to 3 million. Wheat sales anywhere from 250,000 up to 600. Remember, October grain options do expire tomorrow. If you have some open positions there, make sure you take a look. Looking at this December corn chart, we have broken down below some chart support. There was kind of a trend line that came up off of that late August low. We're below it here this morning. You've still got that gap unfilled on the December corn chart at 346. That's your target if this selling pressure continues. Soybean market, again, I think harvest pressure or the perception of harvest pressure is an issue here. You got that big fund long. When you get any sort of negative news, it doesn't take a lot to see some liquidation occur, and maybe that's what we're seeing here. Now, longer term, I talked about how farmers are going to sell, a lot of beans, deliver a lot of beans right at harvest here. Longer term, you go out into, say, the early part of 2021 or summer 2021, there's probably not going to be a whole lot of beans in storage on the farms across the country. And that could potentially be a positive factor. The unfortunate reality is that when farmer ownership of a given commodity is real light, you've probably got a better chance of higher prices. That's typically how it works. So keep that in mind. There are some re-ownership strategies that I may advise, and this is a very, very rare occasion that I ever advise a re-ownership strategy. But in the case of beans, I may do it on a limited basis here this year, depending on the situation, maybe a month or two from now. The wheat market, is lower, and we've actually seen kind of an uptick in global wheat prices. They've got some dry weather in Russia and also in the Ukraine, but this sell-off in the row crop markets is not helpful at all. We had that December Kansas City wheat futures contract over $5 just as early as Monday morning, and we're down to $4.78 here this morning. Cattle market finished higher yesterday, sharply higher in some contracts, anywhere from 60 cents to a buck higher in the October, December, February contracts. Feeder cattle contracts also higher yesterday. Hog market kind of a mixed bag. Ahead of the cash open, the Dow is down 11 points, S&P's down 3, so a quiet trade, but we had a fairly sharp sell-off yesterday. U.S. dollar's a little bit higher. We've got crude oil just a little bit higher, gold and silver a little bit lower. Remember, if you would like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you'd like to know how I'm marketing grain throughout the year, it's very specific, broken down by crop year, by crop, by percentage. Check out that subscription service. It's $49 a month. Cancel it at any time. No other obligation. You don't have to be a futures or options trader. Certainly check that out. Everyone have a great day. I will talk to you same time tomorrow.